Good evening, my dear professional friends. It gives me immense pleasure to welcome you all to today's webinar on the theme Risk-Based Internal Audit Changing Dimensions. We have an insightful session ahead, and I am honored to be here as your moderator. Before we delve into the core of our discussion, let me begin by extending a warm welcome to the esteemed dignitaries joining us from the IASB. It is my privilege to thank C.A. Chandrasekhar Chitra in absentia, a visionary leader whose strategic insights have always guided the organization through evolving governance landscapes. I am also thankful to our Vice Chairman of the Board, C.A. Ravi Kumar Patwa in absentia, whose guidance and expertise have been instrumental in driving innovation in governance and assurance functions. As we move forward, let me briefly outline the focus of today's webinar. The concept of risk-based internal audit has evolved significantly over the years. Traditional approaches rooted in static checklists and compliance-based assessments are no longer sufficient to meet the dynamic risk profiles that organizations face today. No longer limited to checklist-based auditing or traditional compliance reviews, today's internal audit function is expected to be agile, strategic, and closely aligned with the risk appetite and business goals of the organization. In this webinar, we aim to cover the principles and framework of risk-based internal audit, the shifting focus towards strategic and emerging risk, including ESG, cyber risk, and third-party exposure, the use of technology, automation, and data analytics in audit planning and execution, opportunities for internal auditors, and finally, various case studies as well. Our goal today is not only to understand these changing dimensions, but also to reflect on how organizations and audit professionals can adapt and stay ahead of the curve. It is now my pleasure to introduce our distinguished speaker and faculty for this session, C.A. Nikhil Kenjare. He is a chartered accountant and has cleared various examinations like Certified Internal Auditor, Certified Information System Auditor. He has done certification in Risk Management Assurance. He has cleared the exam of Institute of Chartered Accountants in England and Wales, and he has done certification program on quality assessment and so on. He brings with him a wealth of experience in internal audit, risk management, and corporate governance, and has been a guiding force in transforming audit functions into strategic enablers. C.A. Nikhil has got a diversified experience in the field of audit, assurance, and risk advisory. His specialization includes assisting the clients in systems, processes, internal controls, and complex financial reporting topics. His experience in leveraging data analytics in various forms of assurance services and has conducted many workshops and trainings on use of data analytics in audit and financial reporting. With over 17 years in the field, he has led enterprise-level audit transformations across diverse sectors and is a respected voice in the professional circles. He also used to be a guest lecturer at various professional institutes. We are truly fortunate to have him with us today. With that, I now hand over the charge of the session to C.A. Nikhil.
Nileshji, thank you for your kind words. And I started reflecting on these things, that how many certifications a person should have. So I formally announce everyone these days that now I have stopped getting the certification. It's a time to implement, because there are so many things which are actually awaiting the different dimensions from chartered accountants. And chartered accountants and internal auditor is in a way a rare combination. Anyway, thanks for the introduction, and I have taken care that the first slide at least has got a full compliance with the code of ethics. So I have just added my name. And good evening, friends. We are here to discuss something which is little bit fundamental and more from the perspectives of looking at the data and ultimate benefit of the stakeholders. How we can do all these things, and in a slow, gradual manner, we will try to do justice with that. I think we have got 1 hour 45 minutes, right? And, and
Yes.
we'll have a questions and answer session at the end of the this session, and you can in the meantime type your questions. I think everybody will be on the default mute, but since we are not able to see any of you, humble request, be attentive and engaging. We'll try to make it as relevant as it can be for your benefit and everybody's benefit. Okay, thank you. Now, the topic which was given, actually, Arunji, I'm thankful to him and the entire Internet Standard Board as well for getting this session announced. And when we started discussing that which topic we should be having, so instead of a very technical topic, we thought that let us have something which is covering all the aspects of the profession and the need of an hour. So we thought changing dimensions. So when we say dimensions, it's all about looking at the things in a different way, not from the only single angle. So that's what we will try to do with every aspect which is relating to internal audit. And let me start it. I deliberately have not put any index so that people can guess how much boring or interesting it could be. So let it be something surprising even. So so you can see that it's something to do with music, and an actual case. There is nothing hypothetical coming out of the slide. What happened is renowned Indian classical singer. They do have their social presence, social handles, YouTube channel, etc. And they were considering how they can optimize their social connect, and they reached out to us plus one media agency for that. So how can an introverter help in this? You may feel this is little odd because what a social media optimization has to do with internal audit profession, that could be a natural case for you, or you may be wondering what exactly is to be done. But take it from me, there is enough scope if you understand a little bit of what they are trying to achieve, and what we in our syllabus taught is the discipline and the dissecting of the problem to its last mile, and advice to our clients in respect of what they want to do, obviously in an ethical way. But right now, this example actually opens up many dimensions for all of us, that will we be doing the financial statement and audits around financial statements? That's the key question. And I think it's a time to move out from that, should I say, comfort zone? Uh, that's the right word, because it's obvious and bread and butter for us that how financial statements are made, balance sheets are prepared, etc., and the aligned earlier set of accounting standards and Ind AS. So those are the things which are given. We should continue with that. But at the same time, there are so many aspects which clients are seeking, and it's very difficult situation. It's a difficult situation to say that we don't provide these services, and we can clearly see that they are requiring those kind of services, and some of these are easily doable at our end. Only thing we have not thought from that angle. Uh, I have seen multiple chartered accountants, senior chartered accountants. They were doing all these things. Only thing they were doing it as an advice, verbal advice to their clients. And what happens is that skill set is a personal skill set. So it remains with that person and need not be passed on to the next generation. Now, in a coming situation, especially the intern audit, the bundling of services and offering them under one roof, that is something going to be a relevant one. And thanks to ICAI, now they allow you to have a multidisciplinary practice where you can get other professional also as your partners, subject to certain rules. So what I'm trying to say in all is it's a very uh, I would say paradigm shift which is happening, and if we are not taking care of this situation, loss is ours, because there are ample of opportunities which finally will be turning very positive for the profession, and technology is a backbone of all these things when we are providing services. And how that can be achieved? Obviously not compromising the basics. So we will start with some of the basics, revisit to them, and slowly move to the current paradigm or current area, which we end up seeing day in, day out. Nilesh, you let me know if I'm going too fast. It's visible, my voice is audible.
Yes, sir. Yes, sir. I will let you know if there is
Okay,
any issue.
fine, fine, fine. So going back to basics is required because what we face is a chartered accountant who had just started a practice. He may not be having a big client, and whenever some big opportunity comes to us, the only support we have is our fundamentals, the principles, concepts, definitions are clear, because there is no history file of experience associated with us that takes care of a situation that yes, I have handled this similar situation in earlier career. So if that's not the case, what comes very handy to us, it's the literature, and within literature the concepts, definitions. So let us go with some theory part. I'm aware of the thing that more of a theory, especially on the online platform, people get very bored. So we'll keep it minimum. So intronet, the definition given by our ICAI is that provides independent assurance. So first thing, remaining independent on the effectiveness of internal controls and risk management processes to enhance governance and achieve organizational objectives. It's a very two-liner, maybe a simple definition, but what it means to our profession, we will try to cover that, because there are important words like independent, then assurance, then internal controls, risk management, governance, and organizational objectives. So by our literature or the syllabus, CA final syllabus, we are aware of the terms to some extent called internal controls, risk management, and independence. Many of them may not be knowing the governance part of it, but governance also little abstract concept, and it will be known to many of you. But how many of us are putting efforts to look at the organizational objectives and then do all these things? Because if I am an internal auditor, I'm getting appointed for a company who is crossing those companies act thresholds. I will say that procure to pay, the procurement, hire to retire, sales, inventory. These are the areas which should be sufficient for the statutory auditor to comment in CARO 2020, like it's commensurate with the size and nature of the business. We have seen the reports, nothing alarming is reported, etc., etc. But when you go to the basics of it, then you will come to know that internal audit actually has a tremendous opportunity to work with the owners, work with the senior management of the company. And it is important at this point to highlight the basic principles which are given in the internal audit conceptual framework, which is published by our ICAI. So independence, integrity, objectivity, due professional care, confidentiality, skill, competence, these are pervasive in a way, because these are applicable to other services as well. But risk-based audit, systems and process focus, participation in decision making without compromising your independence, sensitive to multiple stakeholders' interest, quality and continuous improvement. These few bullets which are appearing on the right hand side of the slide, these are something very specific to internal auditor, and generally if you are doing a stat audit or bank audit, etc., you are not aware of these things, or we are not putting conscious efforts or investments in these areas. So how we can put that? And that is possible by taking a very larger view. When you say on a canvas, if you want to paint something, take a wider view and look at the composition of the elements first before applying colors and putting the detailing into a painting. Same way, if we can see a larger picture, then it's easier to imagine where we'll be adding the value. So this diagram, I was fortunate to have Mr. Hemant Joshi as my partner at Deloitte when I was there. And he taught us about all these basic principles. It's nothing but if you refer to it in substance, it's a COSO framework developed by the Committee of Sponsoring Organizations in the USA. So that is articulated in a different way. But what we thought is it's a very simple pictorial demonstration of what exactly we'll be attacking. On the right hand side, there are focus points for the auditors like efficiency, effectiveness, safeguarding of assets, then reliable financial reporting, legislative compliance. Now, a reflection over here is how much percent of your audit effort, internal audit effort, is put on these four buckets. Largely, it will be moving around the reliable financial reporting and legislative compliance, that is PF, TDS, GST, income tax, and so on. But are we doing enough in terms of asset safeguarding, fraud risk, efficiency? And now we are right now working with a very I would say, a prominent listed entity into FMCG. And what comes to surface is there is a good amount of an overlap between the internal financial controls and internal audit. Then the orderly and efficient conduct of business, which is mentioned in section 134, subsection 5 of the Companies Act 2013, that is something incremental to what is issued in the opinion called IFC OFR, that is over financial reporting. So that means efficiency rated areas are we scoping in for internal audit? That's the first question. And examples, obviously, we are taking many examples after this, but that's the first question you should ask: that are we taking up these areas? Then asset safeguarding. Then it includes the IT assets. Now these days, intangible assets. Sorry, intangible assets are like backbone of IT companies. How those are safeguarded against the malicious code, viruses, thefts, or even the network attacks, which are obvious. So it is a time to comprehend that it requires something beyond the knowledge of antivirus. So only putting antivirus is not something going to take care of your assets, especially IT assets. So are you employing multi-factor authentication? Whether you have conducted a vulnerability assessment, penetration testing, which is from the reputed or credible institute. All those things are there. And what we end up looking at is system policies, procedures, which are employed by the company. And here is, and it's a good thing that the auditors, they talk to management and they report to the highest forum, that is board and audit committee. So they have got channels, both the channels open for their interactions, but their obligation is towards the board and audit committee as far as the legal parlance is concerned. But that is not stopping them for giving practical, implementable, and good suggestions to the management. So there has to be a balance between, and it's a long ongoing debate. I'm part of IIA Institute of Internal Auditors as well, and you can see that many times the issue comes up that should an internal auditor be framed or he should be a strict vigilance kind of person. So answers differ, but independence is at the peak, and that has not to be compromised. That is primary, but that doesn't mean you will not offer an advice which is valuable in the context. Now, context, in order to understand the context, are we aware of the organizational objectives, the mission, vision, strategy, enterprise risk management, and the values which are actually core to the organization. Latest 3 4 years horizon of uh, things which are planned by the company. Are we aligning our efforts to those areas of strategic importance, etc., etc.? All that put together is a purview which is important for the introverters. So this larger picture finally ensures that the governance is achieved. The good governance, the cloud box which is appearing on the top of the image is nothing but the definition given by the Kumar Mangalam Birla Committee on Corporate Governance. And there are various definitions, but in my view, this is the relevant one which covers every stakeholders. That it's enhancing the value of shareholders, keeping in view the interests of other stakeholders. So when we say interests of other stakeholders, say take the banker or the creditors, and we end up looking at their contracts. So from contracts, the data which they generate in terms of their service or supplies, and the correspondence in terms of paperwork which is happening through these days through electronic systems, the invoices, conditions, penalties, credit notes, all these things put together is their interest protection. Are they taking disadvantage of some loophole happening in the company or available in the company, and vice versa? So a fair practice, arm's length practice with every stakeholder, how that can be achieved, that can be a part of Internotter scope. I hope we have spent enough time on this slide. If somebody has got question, we can take it later on offline as well. I think this canvas is needed because that gives you a very 30,000 high level view where we should be placing ourselves as an introverter. So that's the objective of putting this slide. Moving ahead, when we say it's a risk-based internal audit, now you see every communication from every regulator, it talks about risk-based internal audit. RBI latest circulars also are talking about risk-based audits. But without understanding the concepts of risks and controls, it is very difficult to carry out a risk-based internal audit. So risk, as all of us are aware of that, we do take insurance, we wear helmet, we do so many things to protect our lives from the mishaps. Same way, the company is exposed to so many threats and there are risks, and which are if crystallized, they convert into the implications which are financial, reputational, and disruptive. So anything that brings a deviation in the expectation of the company, that's the risk actually. And generally people say that it's a negative connotation, that something will go wrong is only a risk. But the upside of the risk, that because I have not taken a conscious risk, I am deprived of the upside which would have been possible with maximum chance. So conscious risk taking, the upside, looking at the upside, what is missing, what is not missing, should I do this? Because if you are in business, risk is inherent. And since risk is inherent, it is inherent for auditors to understand risk. That's the simple chain of thoughts if you can apply to it. Then, when we see a risk, there has to be a mitigation. So, risk, what we noted is risk are those uncertainties of outcome, whether an opportunity or threat. So, opportunity word is important, arising out of actions and events, because there will be some contributor apart from the acts of God, the force major, which will contribute to risk. It may be external, internal, it may be system, non-system, it can be automated, manual, it could arise from any environment, macroeconomic environment. Like we all know that before understanding, before straightway going for an internal audit, it's better to do a pastel analysis of an organization so that we understand its political background, legal background, environmental aspects, etc. That gives a good fine focus on the areas to be scoped in. So, similarly, understanding the risks which are pertinent for an organization, that's the first step. Then control is obviously something that reduces or mitigates the risk, which we all know in the form of risk control matrix, which is prepared for IFC, internal financial control testing. So that is generally for either detect or prevent the errors, mistakes, and frauds. So fraud risk consideration is another dimension where internal auditors they have to invest. So control, when we say, uh, it many people get confused between the process and control. So it is important that, because if you see, understanding what is control is one aspect, and second aspect is writing what exactly a control is, because we have seen multiple times that if you start reading a control, you fail to understand which part of this control is addressing the risk. And why that happens? Because the control is written like a story, or generally it narrates a process. Actually, a control language should straightway address the financial statement assertions or the other aspects of the risk. For example, risk, if it is, say, misappropriation of assets, and my control is, there is a security officer put in place, and there is a CCTV camera as well. So, operation of CCTV camera, the person coming and going, the chair on which the security guard is sitting, all these are operational aspects. Actually, we should not be that much concerned about it beyond an understanding value of it. Once the process is understood, what exactly, if it is not working, then my risk is elevated. That's something we should be aware of, and that is the key to define controls in an organization. And this is the level which is in IFC called design and implementation level. So whether my design of control is right or not. And for a very startup kind of organization, it is easy to say that you don't have these many controls. But for a matured organization, they say that we are right now 8 out of 10. Can you help us reach 9.5 out of 10 in terms of control maturity? Then there is a struggle that what exactly we should be doing to address those expectations from clients. So that is something you will come to know when the controls are understood in a right way. Those are mapped against the risks, so that a mitigation effort is achieved, and nothing speaks more than a picture. So residual risk is nothing but which can be optimized but can't be eliminated in full. So for example, if my control is 80, my risk is 100, residual risk is always 20. Why? Because despite of undertaking many measures, you can't say that something will not happen. That happens, but the impact has to be minimum because you made investment in the control systems. So in the picture, which is on the left hand side, the person is trying to climb a cliff without any aid or without any instruments. So inherent risk without controls, the controls which he is exercising is not zero. He is exercising his own skill of climbing the cliff. And on the right hand side, he is aware of the risk. That's why they have put the instruments, choke nuts, and harness and all whatnot. So that reduces the risk. Then again, there is a question, if the harness is breaking, what happens? If harness is of not that good quality, what happens? So all those questions are relevant, but compared to the left scenario, the right hand scenario is quite, you will say that acceptable in the given situation. So that is nothing but a residual risk. And if you see at an attempt from any organization is to minimize that residual risk, and since these are abstract topics, you can't actually in practice measure that as 100, 80, and 20. So good amount of judgment is needed in deciding whether the risk is critical, major, minor, its incurrence, its probability, the chance, the velocity through which it will impact you, the speed of reaction and speed of restoration. I'm talking a literature which is COSO integrated risk management framework gives us. So all those things are inherent. We need not go that much technical because this is not the risk management session. So what you can carry with you for this day is A risk is inherent, control reduces the risk, and residual risk has to be optimized, but it can't be made zero. With that logic, we can move on. Now, overall audit techniques. We all are aware that audit techniques are nothing but the fact finding techniques. Why fact finding? Because if you see, uh, there is philosophy as science. That's the topic which talks about the three aspects, that is the learning by senses, that is our eyes, nose, ears, touch, all those things which we learn something. That suppose there is a hot steel bar which is lying and I touch that, and I come to know that it's very hot and it's harming me. It's not good to touch that bar. So that is learning by senses. There is learning by testimony. Means somebody has said, like in our good old days, people used to listen to elderly people. So my father has said this, or my grandfather says this, so I follow that, because if he say, then it must be in my own interest, and I have to follow that. That was the belief. Now people are getting more data access, more becoming global. Everything is at the tip of your Google search, etc., etc. So there are questions which can be asked for whatever is said in that testimony form. So what happens is, testimony at personal level is listening to somebody. When it comes to internal auditor, it is nothing but getting a management representation that yes, I have done this transaction and I own it, and it was within my job description, and the signature is it's my signature, and that is authorized, irrespective of whether you have got a counter evidence or not. So if that's the case, then it's management representation which an auditor is confirming to. But if you see the real intent of audit, considering the basic principles which we discussed on the first slide, independence is something, and objectivity is something at the core of our audit, and we need facts, because when it comes to a scientific elaboration, and audit is a partial science, we can say it's a behavioral science. It comes to a level where we need to draw inferences. So, learning by senses, learning by testimony, and learning by inference. So, learning by inference is something I'm talking about, is part of your inductive reasoning, and that's the philosophy mother branch of all of the work which we end up doing day in day out. Unfortunately, this is not taught to us, but it's required. So, when we focus on facts, that I need an evidence. Now, within evidence, there is direct, precise, indirect evidence, verifiable, non-verifiable, hearsay, verbal, written, etc., etc. But we need facts, and facts can be unlocked by various methods, and one of the methods is inquiry. So, do we have right skills of asking right questions in a given context? I remember one instance where we were auditing with one of the British internal auditors, and he was doing articleship in equivalent in the UK. So he had written all his checklist points on his hand, and he was reading through his hand that this is how first question should be asked, second question should be asked. So I was wondering what he is doing, but he was in a way reading a checklist. So that kind of inquiry won't get you good facts out. What the observation or the experiences, when you start chatting with the users, they give you maximum information, at times useful to the auditors. So inquiry is a powerful tool, and as we all are aware, corroborative inquiry, that asking same question to many people and then correlating whether there is some sense, that is a good audit method. Observation is something which we observe, because there is difference between observing a physical count of an inventory and performing a physical count. So observation also can give you many things which are relevant for the audit objectives. Verification inspection is core to our profession where we end up checking something on our own. And the one which is not mentioned on the slide, I guess, is independent reperformance, sampling or otherwise through analytics or CATs or whatever. So independent reperformance is the maximum assurance which is available to the internal auditor, because I have gone through a similar situation of a control performer and have come to a certain conclusion, and then I check my conclusion against the conclusion reached by the control performer in the organization. If it matches, then it's an assurance. If it is not matching, then it's an observation, or it may be a query requiring further explanation from the company side. So, what I'm trying to say is we have to be very careful in selecting the audit technique in a given parlance. For example, in COVID days, physical verification of inventory was not possible, so people used videos, mobile based video features for conducting the inventory. So there are inherent limitations in that. People can camouflage something, people may not show you all the locations. That's possible, but it is beneficial than doing nothing because of COVID. So now the techniques have undergone a change. There are CCTV footages which can be checked, especially in the investigations which are performed by internal auditors, the fraud risk investigation. So the techniques will vary depending on the size, nature of scope, and the context which you want to establish. If your objective is to establish the conformance with the internal control criteria, then accordingly the objective will be different. If it's proving allegation on somebody, then the objectives and the techniques would be different. So likewise, this goes on. But up to this point, what we discussed is the theory, which is pervasive in a nature, because if it was applicable in 30 years before a scenario, as well as this is applicable right now, it will remain applicable in coming years as well. And now, something to contextualize, we have to get into a topic where we align ourselves with what companies are doing. So for that, we need to be aware of what is data-driven audit. So earlier it was more of sampling and establishing its relevance to the population. Still, it is in place. With automated systems also, you will have to do that. But the focus, shifting it from the voucher to a data which is electronic data itself is a big shift, and it requires conditioning of your brain in certain way so that you move out of your earlier comfort zone of auditing and start discussing, or at least thinking, how I can do an audit through data. So what it means, will come to the intricacies of it. And I'm sure every one of you has seen or faced, used, worked with the logos which are appearing on the screen. And it's not, I'm not sponsored by any of these organizations, but these, since these are the famous ones, the popular ones, we have put them together. Now, the biggest change ERP made is there is a blur line between where the financial reporting ends and other functions take over. For example, in when I say a vendor database and accounts payable function, uh, where actually the financial statement related information is gathered at what time point. So we'll come to know that it is captured at the vendor master level, which is much before than the actual purchase transaction. So that means it has got a complex setup which is interrelated with the finance. Earlier, finance used to be a siloed function, and there used to be a good exchange of papers between procurement and finance and etc. So you can visually, optically, and physically segregate what's happening. But now this enterprise uh, software or the systems, you see that there are so many things which are integrated together. So when we say integrated, like Oracle NetSuite, Oracle Fusion, if you see it's a why it is called Fusion. Those who are frustrated with its implementation, they say that it's a Oracle confusion. But it's a fusion and it's a good software where they have tried to pull together benefits of earlier three systems, their own system and two more systems which they acquired, and but the next question, as an introiter, do we know all these things? That what's the difference between SAP and Oracle? At least the names are different. Okay, that is known. Then coming to the next level, what is the front end and back end of these systems? Then we go answerless. Why? Because we have not put enough efforts on understanding. Because that's the core through which the business is processed these days. Moving ahead, now there are a few terminologies which everybody must have seen somewhere. SaaS, software as service, PaaS, platform as service, IaaS, infrastructure as service. So there are a few examples which are mentioned on the right hand side. So what it means to my client's business, that has to be a very clear idea in your mind. That's if your client is using SaaS platform, what kind of threats they are vulnerable to, what it brings in terms of the business opportunity for them, what are the benefits of having something in cloud, something on premises, etc., etc. So getting a knowledge of all these things is pervasive. Now, functions of ERP, I am not going to get into that, but the features, those are important. Share data, centralized modules, accurate and timely reporting. And now you will, I don't know whether everybody is aware of it. SAP in the backend, they have integrated the requirements of IFRS. So when a revenue is recognized, you can, with some effort, establish that it is recognized in line with IFRS 15 or Ind AS 115. The requirements of the five-step process of performance obligation completion and finally recognition of revenue, right from the identification of obligation, the transfer price, its segregation, consolidation, input method, output method, etc., etc. Somewhere in the back end, they have thought of this, and then it is coded. Now, when it reaches you if you are using some other software which is a very primary one, and you come to know that now there is SAP to be implemented, it's not easy change. They ask for certain discipline, because if that discipline is broken, then their strength is also broken, that those many benefits can't reach to you because you are breaking their system. So in order to follow, so that's why in a way, high level of customization is not desired. Some kind of business level customization is okay, and that shows you the hygiene of implementation of SAP as well. What I'm trying to say is these things an introductor should know. So when it comes to the back end, which is developed in a such a robust manner, when we see a system, it is likely that they will produce a result which is compliant with the accounting standards. If not, it's a responsibility for introductors to highlight that. For example, if SAP is getting implemented, why not an introductor be called for assistance, because their grip on the internal controls and risk and what can go wrong in the test data is established, and people have experienced it in earlier implementation. So the senior management is requesting introductors to participate in the implementation process and offer their suggestions, not undertake the implementation, because that's not something will treat them as independent. But offering advice, looking at the scenario, those are the perfect things which are doable at internal auditor side. So understanding ERP is important. Now, the generation challenge with which we are in, the generation is looking at the data. Now, for the people who are sitting at the top, in technical jargon terms, what we call is as those charged with governance, that is senior management, board members, audit committee chairman, etc., etc. They need a wisdom coming out of that data. So in between there is information, means what is to be captured out of this exactly in the system, that is information. The MIS which you produce is a knowledge, and finally MIS is talking that I have attained a growth of Y on Y growth of 14%. That was possible because of XYZ reasons. And there are few things which are not working right. I have to set those things right. That's what the job of board of directors is. But they need wisdom. If you throw them with a data which is say 10 lakh or 50 lakh line items, it is of no meaning to them. So a process of data getting into information mode, into knowledge mode, and finally in the wisdom mode, internal auditor can help in each of these situations, that what is relevant, what is not relevant, whether the ERP systems are capable of capturing that, producing that reliable information which is helpful for the management in their decision making. Now we come to another dimension called population. Population of auditor interest means, for example, if I am doing a sales audit, the population which is important to me is sales register, the sale order data, the related inventory data, if there is a customer master, that data. So these all are my population of interest. Similarly, there are few reports or data sets which are mentioned on this slide. These are nothing but the population which an auditor would consider for its testing. Now, moving to next concept, which is nothing but a database, relational database, and referential integrity. It's a high time that if we say we don't know this, we will be treated as illiterate person. Why? Because this is how every system works these days. That data once captured has to be used wisely for different purposes, which is nothing but it is called object oriented programming. That my objective is to make a sale, and order to cash cycle captures the customer details at the customer master level itself. So what it covers, it captures the name, GST, address, PAN, etc., etc. So if that those details are captured, again, at the time of invoice generation, I did not capture it again. Why? Because it is available to me through a relational database. So it's nothing but mapping various tables to each other. If you have seen how queries written in any of the databases or querying tools, you will come to know that there is a join, which is either an inner join or outer join, which where you want to include everything from left data and matching from right and vice versa, or you are interested in just ensuring the matching records from both the data sets. So that is something which will fetch an integrity of the data. And in if you have seen, some of you, CISA review manual, CRM it is called, it has got a concept of integrity, that a database should contain what it is expected to contain. So that's the definition of integrity, which is little not giving much clarity. But when I say that my sale can happen in positive numbers, if I see that ERP allows making a sale with minus number, that means I am doing a purchase through customers module. So is that possible? So that will break the data integrity or the table integrity at the back end. So these are some of the things where we have to focus, because this is the way the transactions are getting processed and can be manipulated as well through the overriding access and privileges. Moving ahead, so typically how an ERP is structured? ERP is structured with it is subdivided into various modules like procurement, manufacturing, inventory, order, warehouse, preventive maintenance, workforce, HR, e-commerce, marketing, etc., etc. So whether the 13 modules are rigid one, compulsory, CRM is something Salesforce these days getting a popularity because everyone is willing to implement their business plans very robustly and have a trail of it. So I started putting every lead and every opportunity in my CRM so that right from the inception, I get a visibility that where I lost, where I got the contract, how many days I took to convert that opportunity into a win. After the win, at what point my sales started happening. After the sales, in how many days I could collect the receivables. So that is nothing but the end-to-end so-called order to cash cycle. Those things are possible through CRM. But is it a rigid setup of 13? May not be, depending on the circumstance. There could be a change to these modules as well, and obviously the type of ERP you are having. Now, if aspect which is important for the auditors is ability to comprehend that essentially everything works in a pyramid form. The tone at the top is sitting at the upper part of the pyramid, and the operational management means the people who are interested with recording the transaction at their source. If it's a bank, then recording the first withdraw entry for withdrawals, deposits, etc. That's the operational management's job. With internet banking, we only do it. There is nobody from the banking side to record this transaction. And we have to appreciate this change that earlier we used to write the uh, the withdrawal slip, sign it off, give it to banker. They will record it in their system. Somebody will approve by looking at my signature. If it matches, then the cash is given. Nowadays, a first level data entry is taken care by the customers only. Like we initiate just through a scan, Google Pay or any phone pay app, we initiate a scan and the payment is made. Then operational data entry is taken care of. There is nobody required to make that entry into the system. Then that batch will come as a transactions process on behalf of customers for a banker. Then somewhere with some logic, those batches will be uploaded in the system. Before getting posted, there will be some validation mechanism, either manual intervention or there will be fully automated program. And finally, it will be a hit to a general ledger as well as a sub ledger. So operational management will take care of processing of business transactions in a complete way. Middle management's job is to see whether the things are happening as intended, and tone at the top, they are accountable finally if something goes wrong. And if something happens in a good way, they are looking at those things in the interest of the stakeholders. So that's how a pyramid is. And what goes up what comes actually is approvals, overriding reviews, estimation, decisions, they will come down from top. And data entry level validations, use data accumulation, largely driven by norms, less scope for personal judgment, etc. That is the attribute at the operational management. For example, there is an impairment situation where my value in use and carrying value of asset, there is a big difference. So if I establish that there is a gap, then there is somebody from the middle management or senior management, they will apply their mind and say that it's an impairment apparently, but there is another synergy which is coming to us through this IP, and it is benefiting us in this particular segment of business. Now, this kind of judgment application is not required for a person who makes a GRN. They are given a complete kind of guideline that if it's a metal, then tolerance is so and so. If it's a quantity which is inverted, then tolerance is zero. It has to exactly match with PO, three-way match to be insured, etc., etc., etc. So those are the things which are actually to be understood by the auditors, that where the things can go wrong. Since we are talking about risk-based internal audit, we have to have a judgment that in operational layer where the things can go wrong, whether it will be parameter setting in the ERP system or manual errors or non-availability of staff at the third shift where generally nobody's there to do monitoring. So these kind of things will give you the risk flavor which is required in the risk-based audit. So the purpose of putting this pyramid is we have to have a clear understanding of what comes down from top and what goes up for their review, and where the factual information is available, and at which layer there are judgments and estimates which are inherent. So that's the another dimension. Since our heading is looking at RBI through various dimensions, we are nothing but discussing the dimensions which are inherent in the system, and you can apply this pyramid to any ERP system, any business. It stands valid. Now, data. We understood that data is important. Data-driven audit is important. Database is maintained. It's a relational database. Referential integrity is there. That I have a common key between two data sets, etc., etc., etc. What do we do? We need data. Then how we get that data? It's getting a sales register. It's not that easy. Simply asking for certain data or certain vouchers. You have to extract something. You have to load it to some query data warehouse, transform it, make it reliable, relatable for your analysis. Then again, a genuine, credible source is important. From whom we are getting that data? Is it complete? It is for which period? Then are we extracting it through a download button, or it is available as the default program which is running in the background at 12 p.m. every day it is generated? Is it an overwritten report, or it's a cumulative report? Like for example, in many systems, the inventory is a point in time report. If you forget to download at that report in the month end, it is overwritten by the next period movements, and you can't generate that report again. So whether those reports are generated point in time basis for every month, every quarter, all these dimensions are relevant when you extract any data out of it from the ERP system. Now next question is it valid? Means if there is a data of sales, how I will come to know? By checking a sample within that population, it's not a way to see the completeness. You have to have something which is independently generated, say outward register, or for HR it's a time data which says that the attendance is proper. That main on role analysis if I am doing, and I come to know that there are 1200 people in the employee master, and I am seeing time booking by 1400 people, then something is missing. Either there could be uh, missed punch or wrong punches, or there could be some at the data level, data entry level, pending at the HR master level. There could be a situation where few people, a good batch of new freshers joined through campus, and that happened in the last week of the quarter, and that's how the entries are pending, and you went there in interim. That's why there is a disconnect. But when you go there at the salary processing cutoff date, say it's 26th of the month, then you notice that everything is matching. So these kind of things you have to perform in order to validate the data, because like we have seen in the inference part of gathering the evidence, that if you want to draw an inference and that inference is based on the wrong data, then your conclusions are wrong. Since the conclusions are wrong, two possibilities: the clients will not get benefited, they will lose trust in you, and finally their decision making is also challenging, becoming tricky, because it's not based on the right data. So you can see many verbs on this slide, that is, or many nomenclatures on the slide, that establishing the accuracy, then redundancy, then computing, referential stability, consistency, life cycle, data integrity, etc., etc. All those things mean that you have to validate the data which is taken for testing. Now, a good amount of shift which is happening or which has happened, which is inherent and we don't have choices. We end up scrolling the data, handle it in electronic form. There are many paperless offices these days. The companies are going paperless. They maintain zero physical cash. Everything happens through internet banking, RTGS, etc. And we say that give us vouchers for testing is actually an anomaly that people are moving to next generation technology and we are still asking that we would continue with our own system of older system of checking. So this shift is important when you understand an ERP. Now this is something interesting from the data analysis point of view. In order to have a view created out of data, you need to have a rhythm understood. There are time intervals through which certain expenses happen. For example, rent, there is a monthly interval. If you are publishing your results being listed, then there is a quarterly interval. Half yearly could be the cycle set for the interim appraisal of people. Yearly is an audit. Quarter on quarter is MIS performance review. Y on Y, again yearly review. Cutoff is another year break, which we ensure that the things are moving, not moving from one period to another period. They are properly recorded in respective accounting years. So the time dimension is predominant. When you look at the populations, do you end up perceiving those time cycles? Because see, if you have got say 5 lakh line items and these are spread across various dates in a year, maybe something is happening on 1st, then 3rd, then 7th, 15th, 23rd, 15 transaction on 25th of the month, anything can happen. But out of that widely scattered data, are we able to create or understand the interval which is lying in the data? That's the first step because it has got a rhythm. When you say rhythm, that rhythm gives you a clue what might not be happening in an order. For example, you see that 40,000 is a per month rent which an office is paying. Then you expect to see annual rent equal to 40,000 into 12, that is 4 lakh 80,000. Correct? But if you see that the rent account has got a 5 lakh rupees recording, then from where this 20,000 difference came in, then you understand that in last 2 months, there is increase of 10,000, which is applicable from that point onward. So that is the break in the rhythm. Even if, to draw an analogy from music, if you say that there is something, a composition which is made using the offbeat pattern, it catches your attention. Why? Because it's a break in rhythm for that singer or the instrument playing person. Because that is something not going in sync with what your ears are tuned to. Similar way, if I have to predict a rent expense or any expense, say there is something which is recurring or semi-variable. For example, my electricity bill, there is some inherent portion which is fixed and there is some semi-variable portion. So I expect based on the season these things to go up. So there is some causal relationship which is there for these expenses. And slowly when we talk about causal relationships, we enter into a topic called activity-based costing. So whether internal should be good in understanding activity-based costing, the answer is yes. So there is no limit in putting a constraint in that I am an auditor that I will confine to these 4 or 5 areas. There is no limit in learning the new things or enter into the other skill sets, and it is inherent for some of the skill sets. Now, why analytics? Now, inherent risk, we have control and detection that is known to us. Then limitation on of assurance gathered through sampling, because I end up seeing two deviations out of 25 samples and the population size is say 8 lakh line items. Then how do I say that the examples or the deviations which I got, the two deviations, are the only deviations, or it has got a prorated effect on the population? If it's a prorated effect, whether that calls for the major control failure, or that's the biggest financial misstatement, or it has got rupee 1 value for those say 1000 cases out of 8 lakh rows, and it is immaterial. How do I come to this conclusion? Because it is practically impossible for any auditor to check all 8 lakh line items. Data is available electronically. That's the assumption when you do analytics. Use size of data. We'll come to these tools which handle these use size of data. Maximizing assurance. It is imperative these days because the company side people are also not having enough time to check whether these things are happening in order, and they rely heavily on internal auditors before handing it over to the statutory auditors, and obviously give value added insights that you say that your inventory rework is at 5%, but actually it is at 13. The data shows it. Or your warranty claims are based on past incurrence, but the innovation which you have taken up, it is expected to reduce those warranty claims by say 8%. So all these things are possible if you have a good data and you have good summarization or exception handling tools. So we'll move ahead. Now it goes to various tools which we have and various types of analysis we should be performing when we use CATs. CATs is nothing but computer assisted audit techniques. It's an old word now, but still this is in use. So exception analysis, errors, statistical sampling. We are not going into the types of sampling today. Detecting the fraud, then verify calculations, existence of records, duplicate payments, and there are few things like Benford law, or there is something attribution sampling, or there is some what you call stratification of data. So those are the things which are very much statistical, and they help you looking at the data. Example, when averages are not to be used. We had a renowned and very senior professional. His name is Dr. Milind Vatve. He's a microbiologist actually by profession, but we had invited him for one of the internal audit sessions, and he said you should know which technique to be statistical measure to be used when. For example, they were trying to identify the direction in which a bird fly in the morning out of his nest. So, 50% times they noted that he is flying towards the west, and 50% times they notice that they are flying towards the east. If you apply law of averages, the answer would come that either they are flying towards south or north. So this is the area where you should not be applying a simple average. So that's the level of understanding you should have with your data, and the starting point is know your population. Like a bank, you do KYC, no, know your customer. So for us, know your population first from all the angles. And when our heading for the session is dimension, so do you know your population with all the possible dimensions? It's nothing but the data profiling which you should be doing. Now there are other CATs, generalized, stress testing, integrated test, ERM tools. We have personally evaluated many ERM systems which are now available in the market for one of our clients, in terms of whether these are relatable, how much they can talk to the existing systems in through interfaces. Can it be implemented in the business processes itself, or it will sit on the top of everything and have the only information capture value. All these tools are there, so you can evaluate them against some parameters. Moving to Next slide. Now, nature of analytical procedure and methods. If, like I mentioned, simple statistical measures or advanced statistical measures like the distribution. Now, if you see a data, which is a population for you, it has got some kind of distribution attached to it. Either it will be a normal distribution, Poisson distribution, binomial distribution. You must have heard all these concepts when you were in 11th or 12th standards, but these are really applicable the way data moves, and then you can get a good grip on it. Now, evaluation of financial information through analysis of plausible relationship among both financial and non-financial data. So this is good dimension. That one more dimension, that other than financial elements, I start looking at the non-financial data. For example, customer satisfaction index. Then I look at the culture part of it. Then I look at the risk seriousness, critical, major, minor. Then I look at the rejection percentage. I look at the shop floor accidents. So all these are non-financial data which I can analyze if it is captured in electronic form. Then it encompasses such investigation as is necessary for identified fluctuations or relationships that are inconsistent with other relevant information or that differ from expected values by a significant amount. I was doing audit of one IT company, and like we discussed in the earlier slide that independent re-performance is the best way of assurance. I started calculating the expected payout for the year, employee benefit expense, considering the people who have joined in the month, who got out of the system, means separated during the month, etc. For the entire year, considering the salary increment level, I calculated a certain number, and with very 1% difference, it was matching to P and L. Actually, I got worried because that much matching to the actual is just only out of the logical thinking, is also not possible in an organization which is complex and that employs thousands of employees. So there are very much there are variables which play a role in bringing the variability in the data, so that the data behaves differently than your logical expectation. So you should be aware of areas where you should expect a deviation and areas where you should not be expecting deviation. So that kind of thinking is required when you apply analytics. Now, role of statistics. We are discussing about that. And mean, mode, median. These are the measures of central tendency. Generally, a true and fair view goes with these statistical measures, because when I got the samples and I checked them and I got maximum samples okay, I say that it's supporting my true and fair view of the financial statement. Means what? In a way, I say that largely there are no errors which are crossing my planning materiality. I'm talking statutory auditors language right now. I'm not crossing planning materiality. The errors are okay. Largely, the things are working fine. There are no deviations in the controls, or the numbers support the index requirements or accounting standard requirement. Then, in a way, we are talking about mean, mode, median, because these are the measures of central tendency. If you see people now, if you want to apply these concepts for the head count, then mean of or the average people, they will be honest and they will do their work as assigned and go home, if it is not working from home, obviously. Then you will see some portion, say 5% of population, which are actually lazy, not doing anything. Actually, they are just enjoying their salary, taking good amount of breaks in between, and not in a way seen as value contributor. And there is another 5% which is going extra mile, that they are working day in, day out. They are ready to work on weekends as well. They are extremely bright, exceptional quality. they get business, they have repeat client base, etc., etc. Those are again will be treated as exceptions. Generally, people who are performing good, reasonable, those will be the people maximum in your head count, and that is nothing but a simple average or mode, means x with maximum frequency. Those are the uh, simple applications of the central tendency measures. So statistics start with these simple measures, and it can become complicated with hypothesis testing, distributions like I said, uh, Poisson, normal, binomial, etc. Variable dependency, you can get to root of it through correlation and regression, x on y, y on x dependency. If x changes by 5%, how much variability y gets. So that's the relationship which you can establish through statistical analysis. Now, audit tools, why we want to use that? Because for those who are working on a fixed or variable fee basis, variable fee code of ethics not allowed. When I say variable, time and material, loan staff given to client, that's the intention. Uh, the recovery rate is important, and the time through which you complete the audit with obviously not compromising the effectiveness, that is also important. So these tools give you results in minimum time compared to the manual working, and the level of assurance which you gather is far more than the earlier procedures. So that's the importance of audit tools. Now, do we need to invest heavily into the analytical tools? To start with, the answer is no. Why? Because if you have seen the way Excel has got the updates in last 5 years, it's actually capable of doing all customized data analysis, querying, etc., etc. Like 10,48,576, that's the maximum limit available in Excel. If your data is more than that, you can process that through Power Query, which has got endless data handling capacity. Ideally, the system slows down after say 4 lakh or 5 lakh line items. That's the experience. But technically, if you have got a robust machine, good RAM, etc., etc., it should work. So, what Power Query and Power Pivot is doing, they are doing everything which earlier Microsoft Access was capable of doing. Somehow, for strategic reasons, Microsoft must not have promoted Access much. They have stopped investing in that, and those all features are now available in Excel. The underlying condition, when we say in our basic principle, ethical, we have also to be ethical that our Excel version, if you want all these things, has to be a paid one. There is a cost to it, which is to be paid to the seller. And if you pay that, then the benefits are immense. And comparing the benefits, the cost is nothing. So would suggest that you, if you get authorized license for all the software, then the benefit which is there is not comparable with when you have a pirated version. So Power Query, Power Pivot, these are the few things. We are not going. It's not Excel training, so we are not going to get into the details of it. But you can just note it down right now that these concepts are there. Now, another other tools within Excel is classification. You can do sensitivity analysis. You can do the color coding using conditional formatting, integration with Power Automate. This is Power Automate is available when you buy Office 365 license version. It comes with that, and you can automate very small things or small activities within your organization when it comes to the management of projects. Then Excel linked with data types. Now there is something called naming convention. Hmm. So that you can employ. Then data types means if there is a data, if you have got the latest version, you will see that there are many external interfaces which are enabled, like stock prices or financials. You can get those data straight away into Excel file without going to Internet Explorer or the search engines. Then internal audits, there are few things which are available. Dynamic array functions, those are the technical details. If someone is interested, we can discuss it offline. Now, when Excel is having a limiting factor, what are other tools? So there are multiple tools like Teammate, Audit Board, Pentana, Highbond, ACL, IDEA, Power BI, that is part of the Office suite, has to be purchased separately. Tableau, then GRC platform Matrix, RSA, Archer, SAP GRC, which is inherent if you buy for SAP GRC, it is integrated with your SAP ERP system. So you get good qualitative analysis of your risk and compliance governance aspects as well. So these are something which are beyond MS Excel, where the enterprise is large, complex, voluminous, multi-locational. You can think of these tools as well. The objective of covering these things over here is, if client is talking some of these terminologies, we should know these upfront, that okay, I can understand what it is, how it relates to my reliable financial reporting and achieving efficiency, how it can safeguard the company, how it can ensure the compliance part of it. I am aware of it because I have seen the COSO framework. I have gone through SIS, standards on internet issued by the ICI. I can connect these dots. That's the capability which is needed. You may not be the expert out of these tools, but there are good experts which are available professionally to you. Only thing, we should be able to identify that this kind of need is there, and here my knowledge is limited. I need an expert's help into this. That's what the purpose. Purpose is not to get an expertise in all these tools if you get nothing like it, but that is little difficult. So it's good to get the professional help, and because these people, like we do our audit and taxation day in day out, they are doing these things as their bread and butter. It's good to connect with them. And there are a few more. Notion I have personally used. It's on my machine, and it's friendly for putting few flows in place: SharePoint, Confluence, Jira, etc., etc. Okay, we have come to this point that we have understood the basics. We have touched upon the concepts of risk control, residual risk, inherent techniques of internal audit, then looked at the ERP system, database, referential integrity, relational database, da- data sanitization, data preparation for analysis, then purpose of validating the data, looking at the anomalies, rhythm into data, then looking at the tools which are there, which are helpful in data analytics, etc., etc. What next? And that's the question for everybody on this call, including me, that what these are the things with you. You understood these concepts. What you will do out of this? That's the important question, because uh, if you address these questions in spirit, this is your future, because answering those questions will create some kind of inquisitiveness in your mind. Let us try this out, and let it be at a small pilot level, but let us try this out, and if it works, then I get a solution to multiple similar situations at my clients places. Then I get a confidence, I get a full visibility of that solution, and I can apply that to different client situations as well. So what next when it comes to it's actually a future of internal auditors. If they are moving out of their comfort zone, what all the things which are possible? That's the discussion we are going to have for next 15, 20 minutes max, including some case studies or examples. So this is a good slide put up by our team. How you can look at the value addition process, because value addition is not something that giving a management representation. It's not that tangible that I exchange few documents and the value is transferred. That's not the way it happens. Actually, it's an abstract concept, and the value creation should happen at the both the ends. Like value creation, I consciously take efforts, and the other side of table, the client, auditee in charge, or my key stakeholder is also perceiving that the value is received. I only claiming that there is a value which is imparted, which is shared with you. There is a good value addition, hence I need a fee increase. And others saying that there are hundreds of problems, you could not cover at least 10% of it. So 90% is still unaddressed. So for me, I may be achieving 5% earlier, moving to 10% is a value addition, but the expectation could be 100, where I am lagging behind by 90. So what I am trying to say is value creation has to be established, defined when we are making conscious effort for it. For example, compliance value creation, historical focus, forward looking insights. This is a typical statement when we start to learn a complex standard in IND 109, that my incurred model, I move to a control based model, which is a futuristic model, that it is giving me forward looking insights, that if a particular customer is not paying in time, what's the chance that they will not pay again to you on a timely basis. That I consider, and then I project my expected credit loss. Versus earlier there was incurred loss model, that somebody declares that he is not able to pay you, he has become bankrupt, etc., then only the provision is to be taken. So similar way, when it comes to internal audit, if it is reported to you as the historical record, so typical job for the auditor is to perform a post-mortem. But with those insights, if you can say that if this continues, then next 2 years the company is going to expand in a geometric progression, these things will have a problem. Can you create that kind of forward looking insight? That's something which is important, and areas are endless, like cybersecurity, ESG, AI. Those are the things where companies actually they need help from the experts like internal auditors. Now, financial focus, non-financial risk focus, are we covering? Say, for example, there is a company which initiated audit on work from home facility, whether it is misused. So there is no per se an amount involved. So there is uptime of machine, the time machine was engaged in accessing various sites, the whether those sites were pertaining to the official job, then at what time you switched your machine off, etc., etc., and the bandwidth which you are using, the antivirus you have, the software, if any, you have downloaded which is not permitted. All those things are required when you do work from home audit. And again, that is to start with, it is non financial. The implications could be financial. So, do we do that? So we have to appreciate the fact that how role is changing for introverters. Now from standalone function to integrated partner. It is given to me as procure to pay, say order to cash, fix assets, and hire to retire. I will do sampling in these 4 cycles and issue a report. And then if there is something coming extra to it, I don't know. Why? Because traditionally I kept doing these things only. But integrated partner, when I say, can you be called for M&A transaction? For example, mergers and acquisitions is happening. And forget about the big setup, a small setup, say having a 30 crore turnover, and now they want to establish branch in another geography, say Surat. Is it okay to do that? If they call you as internal auditors to participate or offer your advice in these decisions, then there is something, you understand something out of risk management or the operations of their company, because they get a confidence that you will be a value contributor in these decisions. Means you are aware of their business, the intricacies, replicable processes, non-replicable processes, etc., etc. So it's the nutshell out of this slide is the dimension The paradigm is changing, the roles are changing. You have to focus on the value creation than reporting the failures. Obviously, the failure, if it is noted during the testing, it has to be reported. But there is something else which is management is expecting from you, that what should be the mitigation plan, correction plan out of the incidents which are reported. Now, two roles. I think this is taken from IIA. There is now, earlier the word was consulting. Now there is word called advisory. There are two roles, which is assurance provider and the advisory provider. So assurance provider, we know that it's all relating to addressing the compliance and basic stuff of internal audit. But when it comes to advisory function, it is all about undertaking all non-traditional areas for consulting or giving advice. And I will repeat, if you refer to internal standards issued by the ICAI, you will come to know that advisory is not compromising the independence. In advisory, you are not supposed to assume a management role. You are not supposed to take decisions on behalf of management. It has to be a collaborative, participative, but independent advice making process. So, advisory function, you have to think of what else you can do to your client, and that's the way you can get good fees as well. So you can, and now you will remember the first slide which I have shown was a real instance of helping or working with a renowned classical singer, Indian classical singer, in optimizing their social presence. And here is the guideline on role of internal auditors in social media consulting. So there is some good amount of podcast which is there. If we are going to share this with you, you can, if you wish, you can view or listen to that podcast. But what I'm saying, the thing which was put on the first slide is not theoretical, or it's not made just to invite attention of all the users alone. That was the objective, obvious, but it's not something coming out of air. So what we did actually in that social media enhancement is, what type of content is created by that singer, how many compositions they have done, how presently these are put, what are the key search words which are put below the YouTube channel or YouTube upload, what are the other channels which are providing similar contents, what could be the differentiator. So all this is talking about the value creation for that particular individual artist. So once we understand the philosophy, that what we need to do, and it's all well fitting within the definition of internal auditor, how I can assist some artist. I am there to work with the companies which are producing the goods and giving services. That may not be the limiting factor. That's something we have to appreciate at this point. Then some of the non-traditional engagements, cyber security, data privacy. Obviously, for all these things, you will need some experts' help. But we, as an integrator, can undertake these things, and some of them we have already working on for our clients. BRSR, business responsibility, social business reporting, say social responsibility compliance, ethics related culture risk, third party vendor audits. There are mystery audits which are now encouraged and permitted by the ICAI. So you can act like a customer and visit some Audi showroom or Mercedes showroom and ask questions. Only thing, you have to dress up like a person who is capable of buying these cars. ESG assurance engagements in listed companies possible, and there is good amount of advisory which is possible when it comes to review of draft annual reports. There are, if you refer to SA 720, that talks about other information. So making that other information consistent with the financial statements itself is a big task, and with the time pressures and the complexity of data, the way it is appearing for multiple times in the annual report, one has to render that service as well. That's the need of an hour. And the forthcoming standard on performance management performance measures, they are going to change everything, the way the things are displayed, like P&L will get transformed in a way the cash flow looks like operating, financing and investing. Those will be the sections in P&L. That is very near, I think 26 27 is the year when that standard will get applicable, and we will have no choice but to get compliant with it. So early adoption of those standards, making companies ready for that standard, are some non-traditional engagements. Now we'll quickly cover two examples where these were little non-traditional. First is, if you are aware of the automotive industry, the changes happen in a retrospective way because the underlying raw material price is driven by the fluctuating market forces. The market forces are so dynamic that the prices are, or the rates are fluctuating. Then the way it impacts my raw material, it should impact the financial finished product as well. Then customer acknowledges this, but they can't give effect to it real time basis. So they decide some cutoff date and say that for these 4 months, these rates will apply. If it is applying in a retrospective way, I have to revisit every invoice which was raised in that period, raise it at a differential rate, applying the quantity multiplier, and there is a differential amount. Either we have to recognize incrementally or we have to accept as a deduction, depending on the price movement. What we noted is they put one person and it was manually done. It took around 6 to 8 months to address those 1 year or 1.5 years context of rate changes. We employed something called query building on the logic of rate change, and it took around a week for processing the 6 month job. So that's the benefit we can have with the use of computer aided audit techniques. And the key lies in not in the developing the query, means writing the code or applying that. That is the speciality of the people who do it, because that's the very technical and specific knowledge. Our contribution is understanding that my traditional auditor audit procedures will not work over here. At the same time, I should know that can it be handled through Excel? Yes or no? If not, which type of solution should help this, and do I have a connect with that expertise or a person who has got that expertise? So all these questions, if they are coming to your mind, there is a solution which is right now appearing on the screen, that instead of 6 months the job could be finished in a week, and with higher accuracy level and completeness addressed. So that is one example. Another one is the company had excess manpower in their view, in the view of senior management, and they insisted us, they told us that you do a scientific analysis of workload and let us know how many people are excessive. Not the case that they will be said goodbye, and but there could be a possibility of rearranging the workforce within various departments, because at the same, when you see a particular function having excessive manpower, there could be a function having lesser manpower, so there could be a redeployment opportunity. So it required analysis of routine activities using time and motion studies, that I undertake this function or this job and I complete it in 3 minutes, say GRN preparation. So in a day, I end up having these mini GRNs. So that gives you annual volume, and you come to know that instead of 3 people, it can be done by 2 people as well, considering the volume. Then that one was in excess. And then the management was happy to see that their apparent judgment of excess manpower and the judgment which was reached, the conclusion which was reached through this logical and scientific way of analyzing the workload, they were coming nearer to each other. So that is something which is handled by the internal auditor. And these are the things which are possible for an internal auditor to undertake, and that's the future, I would say. And are you a trusted business advisor? Like we said, in any difficulty, whether the owners, promoter group, and board of directors, if they remember you that we should invite this person in any of the 1 to 9 situations which are mentioned on this slide, that if they are thinking of these attributes, I am a critical thinker, I am an inspirational leader, etc., etc., then it's a qualification which is offered on you that you are a trusted business advisor. That is, you are moving from a typical siloed role of internal auditor. Again, I will repeat, not compromising my independence. I'm not there to take management's position, take decisions on behalf of management. I'm not processing their business transaction, but I offer my valuable advice. Now, the question with which we are going to end is, do we have the required skills? Skills of thinking in on these lines, some of the skills of analytical nature. Do we have those skills? Do we understand Excel or other products to that level? Do we at least understand that here we need external help, etc., etc.? I would like to end the session over here and switch to the question answer part of it, because in 3 sections we tried to see the basics, the analytical data driven audit, and what next. I think that's the good dimensional, 3 dimensional view for everybody on this webinar. And if you have some questions, happy to answer within the given time. Thank you.
Thank you, sir. Now let us move to the question and answer session.
Mhm. Where I can see that those?
Sir, I am going to read it.
Okay, fine.
There are only 2 questions, sir.
Fine.
Yeah, the first is that I identify the completion of FATCA and CRS reporting by comparing 2 years reporting to see completeness of my financial year. So in this data extraction from independent source was not possible due to size of data. And can we compare 2 periods written? Can we compare the 2 periods written is also data validation or data completeness? I guess the question is not complete.
No, no, I got the question. If data size is a constraint, you need to get the help from the expert who know or who use uh, tools which are little sophisticated than the routine Microsoft based products. So it's possible, because see, if government can analyze other data, which is actually in multifold compared to the normal transactions, then there are tools which are possible, but only thing the cost is involved, and so you have to equate the cost and benefits of these tools as well. Technically, it is possible.
Okay. So the next is that tools outside Excel. Can you please share the first 2 slides again, please?
I can share. I can share the entire presentation,
Okay.
which the participants can read at their leisure.
Yeah. Yes, sir. And the
Yeah,
video is
nothing. See, actually, another dimension to this presentation is 90% of this presentation is built using the AI and Copilot and Google capabilities.
okay, sir.
So nothing confidential in what I'm trying to say is there is nothing confidential in the presentation. We can share that.
Yes. The next is, does any certification UDI required for internal audit?
UDIs.
I guess the questionnaire must be referring UDIN.
Udin.
Ah,
Okay. Okay. Do you require to use Udin for doing analytics?
yeah. Is it required for internal audit?
Internal audit, if you see the drop down given by the institute, it does cover internal audit. Now, whether internal audit is an opinion or only an assurance based on exception, there is good amount of debate which is possible. On a safer side, giving Udin is desirable.
Okay. Since there are no more questions, we move towards the conclusion of this session.
Thank you. Actually, I should thank Internet Standard Board, Nilesh ji, you, Chitle sir, Ravi Kumar Patwa sir, and our president for giving this opportunity. It is wonderful talking to these participants, which are our fellow colleagues, as well as it is a good time to introspect as well that the certain fundamentals we keep forgetting. It's good to revisit.
Right,
Thank
sir.
you.
Right, sir. Thank you so much, sir, for such an insightful and engaging session. I am sure all the participants leave today with valuable takeaways and a renewed understanding of the evolving role of internal audit. Before we conclude, I take this opportunity to extend my heartfelt thanks to our chairman and vice chairman of the board for their valuable guidance, to our eminent faculty for sharing deep expertise and sparking important conversations. I also take the opportunity to extend my thanks to all the participants for all your active involvement and continued commitment to the professional growth. A special note of appreciation also goes to the organizing team behind this event for their seamless coordination and support. With that, we conclude today's webinar on risk-based internal audit, changing dimensions. Thank you once again, and we look forward for more such interactive and thought-provoking sessions in the future. Stay safe and stay inspired. Thank you.